Ladies and gentlemen, good day and welcome to United Drilling Tools Limited Q3 and 9 months FY22 earnings conference call hosted by PhillipCapital India Private Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in a listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Dhiral Shah from PhillipCapital. Thank you, and over to you, sir.
Yeah, thank you, Aman. Good evening, all. On behalf of PhillipCapital, we are glad and thankful to the management of United Drilling Tools for giving us the opportunity to host this Q3FY22 earning call. Today, from the management side, we have Mr. Pramod Kumar Gupta, Managing Director of the company, Mr. Kannal Gupta, Director of the company, and Mr. Mukesh Mehta, the CFO of the company. We would begin this call with some opening remarks from the management side, and thereafter we will begin with a Q&A session. Now I hand over the call to Mr. Mukesh Mehta for their opening remarks. Over to you, sir.
Thanks, Mr. Dhiral. So, I am just giving a quick disclaimer. During the course of this conference call, there would be discussions which could be forward-looking statements regarding trends, our strategies, and the anticipated performance of the business. These forward-looking statements are on the management's current views and expectations and are subject to various unforeseen risks and uncertainties, including those relating to the impact of COVID-19 on our business, the oil and gas industry, and the global economic conditions. Our actual results may differ materially in any such events. I would request Shri Pramod Kumar Gupta to just brief about the company and what would be our business strategy in future and our current developments in the quarter. Over to Shri Pramod Kumar Gupta.
Yeah. Thank you, Mehta ji. Good afternoon to all the participants, and we thank you for your time and interest in UDTL. We would also like to thank PhillipCapital and Mr. Apoor Shah and Mr. Dhiral Shah for organizing this event for us. We believe that you all would have preliminary understanding about our business and operation. Now, I would like to give a brief about United Drilling Tools Limited. United Drilling Tools is a global manufacturer of high-quality, precision-engineered products in upstream oil and gas exploration. It is a single manufacturer of several oil drilling items such as wireline winches, stabilizers, large OD multi-start connectors in India. It is a solution provider with presence in downhole tools, wireline, well service equipment, and gas lift equipment. This has led to the company 60% of the market share in upstream drilling tools and equipment market in India. United Drilling Tools has a good pedigree management with 4 decades of deep industry experience of serving in the oil exploration and production sector. The company has 4 state-of-the-art and technology-focused manufacturing facilities across Gujarat and Noida. Finally, the company has an integrated value chain from being a stabilizer manufacturer to manufacturing various oil fields, drilling and production equipment. Our revenue breakup are that 68% of our revenues are coming from casing pipe and connectors, 10% from gas lift valves, 3% from stabilizers, and 9% from wire and winches. Now, I will go to the key developments during this quarter. We are still in the process of developing new product lines such as side pocket mandrels, swift connectors, and links connectors, which have demand in India and overseas markets. A copy of press release may be viewed on stock exchanges for these. Number 2, we have got the design patents registered in UK for multi-start casing pipe connectors, metal-to-metal seal casing pipe connectors, and weight set casing pipe connectors, registration of which is valid for a period of 5 years. Copy of press release may be viewed on exchanges. Number 3, we have appointed marketing representatives in Egypt, Libya, and Vietnam to promote our products and expand our market base in these countries. Copy of press release may again be viewed on exchanges for this. And then finally, local approval for new upcoming project in Gujarat near Mudra Port has been approved, and registration of the land has already been done. Our future business strategies include increasing the registration in international markets, adding footprints in Southeast Asia, Middle East and Africa, scaling capacities of all product lines, increase production range via organic and inorganic routes, reduce cost of production, and enhance revenue potential and profit margins. This is the summary of our presentation. Now I will request Mehtaji to give a presentation on our Q3 results.
Thank you, sir. In Q3, we have achieved a turnover of 46 crore 14 lakh, which is 41% more than the Q3 results of the last year. And we have the EBITDA of this quarter is 19 crore 0.96 lakhs, which is 30% more than the Q3 of the last year. And the percentage of EBITDA is 43%. And the depreciation cost is 0.68 CR, and the finance cost is 0.07. This finance cost is the minimum in the last 3 years. And the profit before tax of the current year is 19 crore 19 lakh, which is again 32% more than the Q3 of the last year. The PBT is 41%. And tax on the is 61 CR. And the PAT margin is 13.04 crore, which is again 8% more than the Q3 of the last year. And the PAT margin is 28%. And the board has declared a dividend of 9% for the current financial year. So I transfer the line to Shri Pramod Kumar Gupta to open the question answer session.
Yeah, thank you, Mehtaji. Now we are open for question and answers. I'll request the participants that if they have any questions, please come forward and ask them. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question may please press star and 1 at this time. The first question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yes, sir. Sir, these press releases which you have sent, and in that one of the press releases about marketing tie-ups in those countries, when should they translate into either order inflow or some revenues? If you could help us understand how much time will it take. And second, on your Mundra facility, what we see in the presentation is that we have bought the land and all registered the land. So now, should this facility be constructed and be ready for commercial use?
Yes, please. With regard to our this appointing of marketing representatives in Libya and Vietnam and Egypt, primarily we are already starting to get, smaller quantities of orders. Those are like development orders, which we are already getting. And we are hoping that within a year time, we will start getting, full quantity of these orders from these countries. With regard to Mudra facility, all the registrations are now already done, and we are hoping to start the construction in next couple of months, and the facility should be ready in about a year time.
Sir, a follow-up question. You haven't discussed the order backlog now that you have, and what kind of revenues do you see now for the year end after 9 months have passed? So what kind of revenues do you see for the year, and what kind of growth do you see next year, that is 23?
Well, we are hoping that our revenues for the fourth quarter will be similar to what we have in the third quarter. So overall, our total revenue for the year may be around 200 crores. And with regard to the next year, we are hoping that there should be a increase of around 30 to 40% in the revenues.
And what kind of order backlog do you have now at the end of quarter 3?
We have about 70 crore rupees worth of order backlog, but we have also bid for around 200 crore rupees worth of projects, in different with different companies, and we are hoping that around 50 to 60% will turn into orders.
Okay. Thank you very much, sir. If I have more questions, I'll come back. Thank you.
Sure. You're very welcome. Thank you.
Thank you. Anyone who wishes to ask a question at this time, they may please press star and 1. Our next question is from the line of Apurva Shah from Phillip Capital. Please go ahead.
Yes, sir. Thanks for the opportunity. Sir, can you elaborate more on the design patent in UK, and have you started participating in any tenders, or how would you envisage the opportunity over next 2 to 3 years? Because we have the ambition of maybe getting a 5% market share. So can you just correlate the ambition with the patent you received in the UK market?
I'm sorry, I have partly understood your question. Can you please repeat that again, sir?
Okay. So my question is basically 2 parts. So I just wanted some elaboration on the design patent in UK. And
yes.
So have we received or started participating in any tenders? And second part of the question is, we have some ambition where we will be reaching 5% of the global market share. So what kind of revenue we expect from this design patent in UK? So this, now have you understood, sir?
Yes, please. Right. Yeah. Actually, we have already executed some orders from companies in UK, and one of them is Aquaterra. So we are hoping that more and more companies, we are following up with several, all exploration companies there, and we are hoping to get more orders from there. With regard to the percentage of the total revenue, I would say that, you see, North Sea is a big market, and there's a lot of exploration going on there. So that should contribute at least 1% of the, of the total world market, for our revenues, 1 to 2%.
Okay. And so for this 5% ambition, which would be the other major geographies and what kind of action we need to take?
Well, we are already taking whatever actions are required. Like we are establishing our representatives in the countries where our products are being used, and so they are local representatives and they have very good contacts in the oil industry. So that is primarily what we are doing. Plus we are, also sending our business development managers and salespeople, to meet with the national oil companies in these countries.
Okay, understood. And so just a related question, if next year, hypothetically, so like 200 crores this year and maybe 30-40%, so roughly if we are doing 280 crores of revenue, so what will be export contribution in that estimate?
I would say that about 20 to 30% will be our export contribution next year.
And in this 70 crores of current order book, is there any export component?
Yes, around 4 to 5 crore rupees worth of export component is there.
Okay. And sir, and when we say exports, the margin profile will be similar. So like I think the casing pipe and connector is the highest profit margin, followed by maybe winches and etc. So similarly, that will resemble, the export market will resemble the domestic market currently in terms of margin?
Yeah, more or less. I can't say that it will be 100% exactly the same, but more or less it will be the same, yes.
Okay, got it. So I have few more questions, but I will come back to you so that other participants may also ask. Thank you very much and all the best.
Thank you. A reminder to our participants, please press star and one if you wish to ask a question. Our next question is from the line of Anurag Patil from Roha Asset Managers. Please go ahead.
Thank you for the opportunity. Sir, for Mundra facility, how much capex we are planning to incur?
Actually, for Mundra facility, we are planning approximately around 20 crore rupees. It may be a little bit less or a little bit more, but it is around 20 crore rupees.
Sir, how much revenue can this facility generate potentially?
Well, actually, it depends upon the product line, but we are hoping to generate a revenue of approximately 200 to 300 crores, of course, after a period of 3 to 4 years from now.
Okay, in 3 to 4 years. And sir, recent quarters or this year, your margins have been pretty higher. So are these margins sustainable going forward?
Well, actually, we are very much hopeful of that, and the prime reason for that is that for some of the products, we are the only manufacturer in India. There's nobody else manufacturing these products, and for the national oil companies, now it has become mandatory that they have to buy these products from India only. So private players can buy from anywhere else, but we are getting orders from them also.
Okay. And sir, this order backlog, is it entirely fixed price orders, or you can pass on the raw material cost increase?
Actually, these are fixed price orders, but you see, what we do is when we get the orders, we immediately, tie up with the raw material manufacturers and fix up their prices. So any inflation or change in prices usually, does not affect our profits. It's a automatic hedging,
Okay, sir. Thank you very much, sir. That's all.
You're welcome.
Thank you. A reminder to our participants, please press star and 1 if you wish to ask a question. Our next question is on the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Namaskar, sir. Sir, when you have mentioned that the fourth quarter would be in line with what the third quarter was in terms of revenue, we did around 46 crore for the December quarter. And I think we have the standalone and console the same. So we have not any. Do we have any consolidation of accounts also, or is it only a standalone entity?
No, there are consolidated accounts also.
Okay.
I think our consolidated figure is around
52 crores.
52 crores. Yes.
52 crores. Yeah.
Yes.
Correct, sir. So, taking into account 134 we have done for the 9 months, and we are hoping for something 200 crore for this year. So we will be slightly higher than what we did for this quarter, above 60 crore, to reach that 200 crore top line.
Yeah. We are trying for that.
Okay.
It will be around that.
Sir, what explains that this inventory built up and the capital work in progress? Is it the pending order book execution only pertaining to that?
Yes, that is true. Yeah. See, actually, nowadays the oil industry is changing a little bit, because previously they were giving us more time to, manufacture and supply. Now, they want the material very quickly, and maybe in 2-3 months. So that is why we have to build up more inventories to satisfy their requirements.
Correct, sir. So when we look at your presentation, I'm referring to slide number 22. In fact, yes, sir. In the company overview, we have mentioned endorsed by Indian marquee brand, wherein the name of Adani and Jindal Saw, MSL, Welspun, Oil India, every player, pipes manufacturers like Jindal Saw and MSL. So what are the products they are sourcing from you?
Actually, yeah, we manufacture both the connectors, and that is one product, and then the other product is casing pipe with connectors. So the connectors, we are the only one in India who's manufacturing those. But casing pipe with connectors, what is done in that product is that you take the pipe and you take connector and weld them both, and then supply to the oil company. So these pipe companies like JSL or MSL, if they get any orders for casing pipe with connectors, then they buy the connectors from us, use their own pipe, and weld them and supply them to the oil companies. So that is why we are supplying our connectors to all these companies also, like MSL or JSL or Welspun.
So we are mainly into the connector part, not the casing pipe. Casing pipes manufacturing is being done by the pipe manufacturers.
That is true. Yes, please. So we either supply the connectors or we supply the combined product. We buy the pipe from the pipe mills and weld our connectors to them, and then supply to the ultimate customer, which is the oil company. The final
the margin profile.
Pipe with the connectors. I'm sorry.
No, sir, you complete. I didn't get it.
No, what I was saying was that the final product which goes to the oil company is casing pipe with connectors.
With connectors. So just to get an understanding, it is the margins are better when you sell the connectors directly to these pipe manufacturers rather than doing the job work for them. How the margin profile changes when you do the job work also for them. Firstly sourcing the pipe, casing pipe from a pipe manufacturer, then going for the connector and then supplying it to the oil companies. How the margins change?
Well, the margins are always better in connectors than when we are supplying casing pipe with connectors.
Correct, sir. And in connectors, sir, so what are the key reasons that you are the only player, sir? What is it? Is it the technology or patent? What is the key reason, as you have mentioned, that you are the only player? And what is the market size in this segment, sir?
Well, actually, the main reason is in this the high technology, very high precision, and whatever products we are manufacturing and supplying, they are all patented products. So all three of them are working, that we are the only player in this field. Now, with regard to market size of connectors, I would say it is about 50 to 60 crore rupees a year in India only. And of course, the worldwide there is a huge market for these.
And if you could give me a unit price, what is a single unit with a bare minimum specification, a connector cost? I just wanted to understand the volume of connectors you are selling in quantity terms.
I can say that about there are 6,000 to 7,000 sets of connectors each year, which are required by the oil companies in India alone.
6,000 to 7,000 types? So I didn't get that.
6,000 to 7,000 connectors.
That is the annual requirement.
Yeah, that is the annual requirement. Yes, please.
And currently, all these 6,000 to 7,000 are being met by United Drilling.
Yes, please.
Okay. And globally, sir, what is our exposure? And globally, sir, any peer comparison you can give who are manufacturing these connectors?
Well, globally, there are 4 or 5 companies who are manufacturing these connectors. I can give the name of few, like General Electric used to be one of them. There's another company called Drilling Tools, and then there is another company called OSI, Oil State Industries. Mostly these companies are from US, all 3 of them. And then National Oil Well, of course. These are the 4 majors.
Right. So for this 9 months, how have been the cash flows for the company? If you could give the cash generation at the end. And I think in the last balance annual report, there was some loan to the promoter entity. If correct me, Mittal, I was looking at the annual report. What is the current outstanding balance as on date, sir?
I will have to check that. Now P. Mittal is a 100% owned subsidiary of United Drilling Tools.
Okay.
So, it's almost like giving loan to, your own company.
Correct, sir. And on the cash flow front, sir, if you could give what have been the cash generation for the company for the 9 months, and what have been the utilization of the cash?
That Mehtaji, can you reply that, or you have to also check that?
We are a cash surplus company, so we have not utilized any credit facility from bank during the 3 quarters. So still we have a surplus as on date.
The cash bank balance, sir, if you could give that number for 30%.
It's around 20 to 25 CR every year.
20 to 25 CR, sir. Okay. Correct, sir. Sir, when last point is, sir, with respect to your dividend payout part, sir, if I look at your 9 months number, your EPS comes around 21 rupees. And you have made, I think, the second interim dividend payout of 90 paise. So what has been the total payout that has been made to the shareholders, including this in absolute numbers?
I think it's 21, Mehtaji?
Sir, last year we paid dividend of 21%.
Yeah, probably the same we are paying this year, isn't
that
it?
That is the 10% payout, sir, out of, if we take this year 21 rupees EPS, but we have 1 more quarter, so even less than 10% is being paid out to investors. or we can look for dividend payout since we have one more quarter there. So I just wanted to understand what is the policy behind paying 90 paisa or 80 paisa or something like this. On what premise did you conclude with this dividend payout? So that was my first question. Since we are a cash which we have the inventory backup and all working capital requirements are not there. We are not using bank credit if I'm correct me there also. So ये 90 पैसा कैसे workout हुआ सर payout करने के लिए?
Actually, this is usually decided by the board, and board usually has felt in their wisdom that around 20% or 20% is a good number to pay. That leaves enough money for the company to grow also, and as well as the shareholders also get a fair share of dividends.
Right. So 20% will work out at 4 rupees.
Mehta, can you answer that, please? Huh?
So actually, our policy is to share the benefits with the stakeholders also. So we have the capacity to pay to the shareholders. So that every year, if you see the historical data, that every year we have paid the dividend for the last 6 to 7 years. And in between, we paid a bonus share also in the proportion of 1:1.
Plus, so what is our employee strength currently?
Pardon?
Current employee strength. Sir was telling something.
370 people are working present.
370 people. And the permanent and contractual included?
Yes, please.
And that breakup, sir, I think that the employee cost is around 10-12 crore for a year.
Yeah, I'll have to check the numbers, but it must be around there.
It's around 7 to 8%.
Right.
Employee cost.
Yeah. And sir, what includes this other income component of 60 lakh rupees for this quarter?
It's FDR interest.
FDR interest, yes. Correct. Thank you, sir. I'll come in there.
Okay, thank you.
Thank you. Our next question is from Mohsin Rupani as an institutional investor. Please go ahead. Mohsin Rupani, your line is unmuted. Please go ahead with the question.
Hello.
Yeah.
Yes. Hello.
Please go ahead, Mohsin. It seems there's no response from the line of the current participant. We will move to our next question. That is from the line of Nikhil Gandhi from KIFS Trade Capital. Please go ahead.
Yeah, thanks for taking my question. So you said approximately connector market in India is 60 crores. Can you share same way for the winch stabilizers and valves?
See, I can just say that the total in market in India for our product is around 300 crores.
Okay.
And the export market is, of course, 8 to 10,000 crores. So it's very difficult to differentiate between all of them because it keeps on changing, from year to year, little bit.
How much is current export percentage for 9 months?
I will have to really check, but I think
maybe a guess estimate, maybe 5% here and there. That's okay.
Well, our export are about 10 crores. Will be 10 crores this year approximately. So that will come to around 5 to 6%. Yes.
Okay. And when we say this, our turnover includes casing pipe, do we include that figure, or we just have the connector figure in our turnover?
No, we have connectors with casing pipes. Yes, please.
So casing pipe you are buying from out, right?
Yes, please.
So Can you split in a turnover how much is traded component and how much is manufactured component?
Well, usually, even casing pipe with connectors, see, we buy the raw pipe and then we do certain processes on that, and then we weld the pipe with the connector, and then after that we do certain processes, and then finally we sell it to the oil company.
Correct.
So pipe, actually the basic pipe is just a raw material for us. Yeah.
Right. But can you say some value-wise how much it will be?
Yeah, approximately 50%. 50% is the value of the pipe and 50% is the connector.
Okay. And what is the potential maximum revenue possible based on our existing facility? Leave aside Mundra.
Well, we can do easily around 300 to 350 crores with our present facility.
Okay. So, right. And we, if the order comes flowing, I think there shouldn't be any problem to increase.
Yeah, there should not be any problem to increase. Yes, please.
So it's just a question of tapping the export market for you, right?
Exactly. Yes, please.
So now when you say our 300 crore is the Indian market, and if Make in India initiative comes in, will it not be a mandatory for them to buy whatever you are not selling? Because you are out of 300 crore market, you are supplying at the most maybe say 140 or 50 crore. So balance 150, 170 is getting imported, right?
Yes, please. Actually, see this restriction that they have to procure these items from Indian market is for national oil companies only. The private players can buy from anywhere they want to, and like Kane, Reliance, and other. There are a few other, oil companies.
Okay. Can you give split for 300 crore market? How much is private? How much is government?
I would say around 200 to 220, 30 crore is the government, and the balance is the private.
Okay. And out of our sales, how much is the government?
Our sales are about, I would say, 70 to 80% is government.
Okay. Thank you. And the margins are across all the products more or less same, right? Peter?
Yes, please. Well, no, for the different products, the profit margins are different. Like for connectors, it is higher, but for gas lift valve or stabilizers, it's comparatively lower.
Okay.
Or with casing pipe connectors, it is lower. Yes.
Can you share some gross range within which they are?
I can give you just approximately. I think casing pipe with connectors is around 25%.
Right.
25%. And gas lift valves and stabilizers are around 20%, 18 to 20%.
Okay.
And connectors is around 40 to 45%.
Thank you, sir. And maybe if need arises, can you share me whom should I reach out?
I'm sorry?
Whom should I contact in case of the more questions and other things?
Mr. Mehta is there. You can be in touch with him, please.
Okay. Thank you very much.
You're welcome.
Thank you. Our next question is from Pranay Jain as an individual investor. Please go ahead.
Thank you for the opportunity, sirs. What is the revenue growth visibility that we have for the next 1 to 2 years based on, one, the orders in hand, second, the export promotion activities that we have undertaken? What is the internal aim that we are looking at?
Well, actually, I can give you around 3 to 4 years down the road. We are looking at a market of a revenue of about 600 crores. And in next 1 to 2 years, it will be around 300 crores, 350 crores.
And out of this, say 300 crores, what is the indicative export pie going to look like?
The export will definitely be a good portion of that. It should be around 35 to 40%.
That's nice. And pickup in the export number should be visible in, say, starting second half of the coming financial year, especially the market that you have mentioned, Egypt, Libya, Vietnam, and maybe some others, if you could give us some color which are being explored.
Yes, please. Actually, our export numbers are increasing already, and I would say yes, the reasonable jump should start coming in third or fourth quarter of next year.
Okay, and the export markets that we are targeting, say in the top 10 out of the 3 that we've already listed?
Yes, we are targeting, like in Middle East. There are several countries. Bahrain is there. We are getting orders from there. We are getting orders, like I said, UK. There are some orders which we are getting from UAE, and then Singapore and Indonesia. And there are a few others which, are there from where we are getting the orders. US is also one of them. Yes, please.
Okay. And sales, promotion, professionals or slash small offices that we have set up in the 3 countries, which are the others that we are planning in the next year?
Well, in these 3 countries, we don't have our sales offices. We have tied up with the marketing companies there, sales and marketing companies in those countries, who have very good contacts with the oil companies. So we are, primarily working on that. If they get us the orders, then we pay them certain amount of commission, on each order procured.
I understand. So besides these 3 countries, this kind of arrangement, we are looking in which other overseas markets next year?
Well, I think we have about, some negotiations are going on with some we already have arrangements like this. So total, we have presence in about 16 countries so far.
Okay. Understood. And any other products that we are possibly working on to add to our bouquet in the next 12 to 18 months?
Oh, yeah, sure. We are, in the process of developing side pocket mandrels. Then we have almost already developed Swift connectors and link connectors. And there are a few other products, where we are working to develop. These are all new products.
So what would be the revenue potential of these products in India? And also if there is any color for our export business?
Well, approximately if we say we are successful, then in India it could add up to 100 to 200 crores. And export potentials are again, the markets are much higher, but looking at 4 to 5% of the market, another 200-300 crores will be there from export markets also.
Okay. So domestically, we see these products coming to market, say FY23 onwards, and becoming reasonably visible in the next 12 to 18 months?
Yes, please. Sure.
Okay. And just one last question on what is our plan on the shareholder return and dividend payout, say, going forward? I understand there is some capex for Mundra, but aside of this, as our profitability and free cash flow picture gets better, how do we look to reward the shareholders, and what is the dividend payout or any other mean that we would look at? If some indicative numbers can be shared, like you have plans on revenue for the next 2 years or 5 years, something on this front will also be very helpful.
Actually, the board decides that, so it's very difficult for me to say. But like we are giving 20% dividend probably this year, 20% last year. Before that, I think we had given around 35-40% dividend. So if the numbers and the profits will be high, will be good, of course the dividends will also increase accordingly.
Got that. Thank you so much, sir. Thank you. I'll get back to the question.
Thank you. Our next question is a follow-up question from the line of Anurag Patil from Roha Asset Managers. Please go ahead.
Thank you for the follow. Sir, for a new facility, you mentioned the capex will be 20 crores. So that will be the total capex, or it will be followed in further capex in coming years?
I should say, I said 20%. It should be around 20 to 30 crores, total capex.
Okay, sir. Even if we take 30 crore, then 200 to 300 crore revenue potential you just mentioned. The current asset turns for you are somewhere around 4 to 5 times. So why this revenue potential from such a small investment is significantly high? Are the products kind of expensive or higher realization products?
No, some of them are higher realization products, and then in our current capex, probably we have spent more funds in R&D and developing the products. So the capex may be more as compared to what we are now projecting in future in the new facility.
Okay. Okay, sir. Thank you.
Sure.
Thank you. If the next question from the line of Saket Kapoor is from Kapoor and Company, please go ahead.
Yes, sir. Thank you. Sir, there was a change in the memorandum article, I think so, especially regarding this purchase of ferrochrome, ferrosilicon, iron steel, and lot of products, and then about manufacturing of PVC, iron steel, water pipes. So, sir, what exactly are we going to derive from these changes, and are these going to be margin accretive things we are going to do it going forward, sir?
Actually, we have just put those in there in case we wish to go in those lines, sometimes in future, because there is a good market, export market for some of these products in Middle East. So, and that depends actually, and we have enough land, in Mundra, and it's close to port, Mundra port. So that is why we have put that in our, memorandum and article of association.
So, sir, the current product profile के लिए नहीं है, sir. This is for a entirely new product profile.
Right.
Okay. Sir, since you have spoken about connectors and being there in the oil and gas, do we have anything with respect to rigs also, wherein any products that is required in rigs, and we are developing or we are already working for it?
No, not really to rigs actually. Most of our products are consumables, which are used in drilling oil wells.
But in case of the connectors, so these are will stay till the life of the pipe.
Yeah, but you see, when you drill a well, you have to put these pipes with connectors in the well and then cement it. So once you drill a well, they're gone forever. It cannot be reused actually.
Okay. And then in the same well, with the passage of time, pipes are if there is an incremental demand for a continuous in a well where there is an oil output, or is it once for the life of the well?
Usually it depends from product to product. You see, if there are stabilizers and gas lift valves, you keep on needing, new gas lift valves and stabilizers after every 2-3 years. But for the casing pipes, yes, once you drill a well, you put the casing pipe in there and then you don't really need it.
So the demand of connectors are once for the use on. There's no repeated demand for the same well.
Yeah, it's not a repeated demand from the same well, but it is directly proportional to the number of wells being drilled.
Correct. So sir, yeah, please, बताइए.
Yeah, please go ahead.
No, sir, you were answering.
Okay. Yeah. No, what I was saying that usually in India, presently, around 500 number of wells are being drilled, by national oil companies, and there is a prospect of increase in the number of wells every year by 20%, 15 to 20%. So that way, our requirement of our products with regard to casing pipe and connectors will increase accordingly.
Right. And so the demand is also only from Oil India and ONGC, or the private players, Cairn, Vedanta, and also are our customers?
No, they are also our customers, actually. Vedanta, Cairn, and Reliance, and there are Baker Hughes, there is Schlumberger, the Halliburton, all are our customers.
Sir, these are all business plans that are being done for a long-term basis. So you must be having a fair idea of how many wells is ONGC planning to drill going, say, 1 year, 2 years down the line, because the capex has to be planned ahead, and then only the delivery schedules are to be done. So 500 wells are currently being drilled on an annual basis. This is the number for the country?
Yeah, that is for ONGC and Oil India.
Okay, and what is the thought process from the companies going forward for the next financial year?
I would say that there is a increase of around 15 to 20%, or I would say around 15% each year.
But sir, just to have a basic understanding, the sites are not increasing. It is not that they are exploring today at one place and tomorrow they will be exploring at a different site. So if the sites are same, is it the continuous process only that to bring out oil from the well, they have to replace these things with wear and tear? Is there that the replacement demand from the same well, or otherwise?
No, it is the otherwise. There are different sites, you see. They call them basins, Like in India, there are 18 different basins. By basin, I mean a very big chunk of land where the seismologists know that there may be oil there. So initially there is a study done, by seismic surveys where the oil can be there. So after that, they do exploratory wells to check if oil is there or not. And then finally, if oil is found, then they start drilling production wells. So what I'm saying is that it's not one site or the same wells where the work is going on. There are new wells being drilled all the time, wherever the seismologists feel that oil may be there, oil or gas. Yeah.
Right. So, sir, last point is, so an existing well, which is producing oil and gas on a continuous basis, what are the key consumables, sir, which are required there? And are we anyway planning to be a part, because that would be a recurring continuous demand from the product if a well is generating oil?
Sure. Just like I said, the gas lift valves which we are manufacturing, this is a recurring requirement. That is one product line which we are manufacturing, you know. Plus, we are developing another side pocket mandrels. They require those also sometimes. So those are recurring requirements, you know, from the same wells, old wells. Wireline winches are also required to repair and fix the old wells. So these two product lines are there, which are really being used for the old wells.
Thank you.
You're right.
The next question is from Apurva Shah from Phillip Capital. Please go ahead.
Yes, sir. Thanks for the opportunity again. So just a clarification. So on the global market share of maybe 5,000 crores, so what would be the breakup between casing pipe and connector?
You mean the breakup of casing pipes and connectors and gas lift valves and winches like that?
No, sir. So I think on the slide number 33, we have given a very nice presentation where we have given the global market size of our products. So where casing pipe and connector mentioned is a 5,000 crore, out of which we only manufacture connectors. So that's why I'm looking for what is the approximate size of connector market globally.
I would say that it should be out of 5,000 crores. Connector market should be approximately 2,000 to 2,500 crores.
Oh, that's
because it's about 50%, you know.
Okay. And so one clarity. So I think since a few quarters we have been expecting a large order from our key customer, and I think because of, I don't know what is the exact reason, but still that is not reflecting in our order book. So probably that might be in our bid pipeline. So what is the status there? Is there any problem at the customer end, or what is the issue, if you can elaborate?
No, I think you may see it in the next quarter. Actually, they are under process somehow because of COVID and few other things. You know, it was slightly delayed. You know.
So that is delay is only because of the COVID, right?
Right. Yes, please.
Okay, fine. And so just final question, on a steady state basis, what would be our working capital requirement? Because I can understand maybe on a quarter-on-quarter basis, there might be some fluctuation based on the order book or maybe the build on that particular quarter. So on a steady state basis, what would be your inventory, receivables, and payable days?
I'm sorry. Can you kindly repeat that? I just got a half of it.
Okay. So, sir, on a yearly basis, if I look at your working capital cycle, there might be some fluctuations on a yearly basis. So that might be possible because of number of reasons. So I just want to understand on a steady state basis, what would be our working capital cycle, and if you could bifurcate between what are the typical inventory days, what are the typical receivable days, and maybe payable days.
Yeah, sure. Actually, primarily it takes about 4 to 6 months for our products to be manufactured. You know, so that is what our turnaround time is, and we usually get our receivable paid in 30 to 45 days, mostly 30 days actually, you know. And so based on that, we calculate our this working cycle, you know. Did I answer all your questions, or still something is left in that, please?
No, that's perfect. So I think what you mean to say is our net working capital cycle might be in the range of maybe 50 to 70 days.
Right. Yes, please.
Okay, sir. Thank you very much and all the best.
Thank you. Thank you very much.
Thank you. Ladies and gentlemen, that would be our last question for today. I now hand the conference over to Mr. Dhiral Shah for closing comments. Thank you, and over to you.
For Phillip Capital, we would like to thank once again management of United Drilling Tools for giving us their valuable time. Pramod sir, would you like to give any closing comment before signing up the call?
Sure. No, I want to thank everybody who has participated in this presentation, and we are really highly obliged for their time. And if there are any further questions, we are always available, Mr. Mehta and myself. Thank you very much. Thank you once more again. Thank you.
Thank you very much, sir. Thank you. Have a nice day.
Okay, bye-bye. Bye.
Thank you.
Thank you.
Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes today's call. Thank you all for joining us, and you may now disconnect your lines. Thank you.